first part I want to talk about a little bit, and if you've been in the channels, you've probably seen, let me do this here, you've probably seen some discussion about, the SPF process and what we're doing and so forth. And, I just want to go back and cover this a little bit really quickly. It's a piece of our roadmap that's been out there, hanging out there for a long time. And, we always kept saying into the future that we were going to move this onto exchanges, and it was likely going to go on onto, DeFi, and it would go on an alternative chain. And, it just didn't have a date certain because it didn't really need one, right? There was no real, pressing need for it. But more importantly, there wasn't really any kind of legal framework for us to stand on. But what happened was in July, the Ripple case came to not a full conclusion, but they came to a stopping point on certain precedents. And one was that the judge ruled that sales, that are done on a generalized exchange, even if, the project itself is, generating or putting in some of those tokens or even most of the tokens, those are not security sales because there's no expectation of anything from the purchaser, right? When you buy them, you're just buying them out on the exchange and there's no promise or guarantee or anything, really there. From the standpoint of what kind of precedent it sets, let's compare it to what the circumstances were in 2016 and 2017. So these companies went out there and they founded these ICOs and they put out things like SAFTs, which were, really, pushing new ground as far as what was sort of legal. And then the guy in the project that we forked away from went out and he actually he pushed the envelope too far. He actually created something called an internet public offering, which was just an automatic red flag that the SEC was always going to nail, and they did. But the other two projects that generated a ton of money in our niche, well, actually, there's more than two. There's probably about five that did ICOs, but the two that I'm always paying attention to have created a giant war chest. In that case, they didn't have much to hang their hat on. They just went out and said, let's just do this because we need the money and we need to start the project. Let's do it. So what is it and why are we doing it? And, what's the benefit? And, is it a problem? And all the questions that sort of have come up. There haven't been a lot of them, but there have been a couple of pointed questions, and I do want to address those. So what it is and why it got moved forward, right, from the current roadmap that we had posted originally. It was, if you go to the website, you'll see on the roadmap that it's listed to be done sometime in 2024. And what we've had to do is we've had to move it forward, and it's now the top priority. The coder, the back ender is actually doing core coding on it right now on this thing we're calling the transporter. And so this is our top priority. And why? Well, because we ran out of money at the end of 2022. When the market melted down, it froze up all node sales except for really, lucrative sales that we put together around events. People that were interested just fell off the map. Retail disappeared. In essence, crypto winter. But we chose not to do the things that would have padded our, financial situation significantly, but ultimately might have blown the project up. Like if I had sold 10,000 examiners in late 2021, these meetings wouldn't be very cordial. They'd be very angry and very, there'd be a bunch of nonsense. So it is what it is. We went broke. We didn't have any money. We've been essentially surviving on just some special offers that we've made. We've put a lot of different things out into the world over the last year in order to get things to happen. And then ultimately, the event happened that really was necessary, which was we began to sell storage live for real with true billing and everything operating the way it's supposed to in July. So as of July 1st, when we went live, we've been generating revenue on the storage component. We got to a place where we couldn't pay any of our developers at all. And that's not going to work because obviously they have to pay for house and rent and all that sort of stuff. So we hit the wall. So what I started to do there was I started to put together a couple of programs to kind of ensure that we were going to make it through this crypto winter and come out the other side. And the first one was we ran out of SCPs because, with the crypto getting sold off as hard as it did, we ended up spending on rebates into the Examiner crowd double, maybe closer to 2.5 what we had budgeted and expected to sell off or to give off in those rebates. So that ran out real quickly this year. And then we ended up having to do some things there. So one of the things we did is we sold some stock equity in the corporation for large amounts, significant amounts of SCP. And so I'm really grateful to everybody who took, part and advantage in that. They got a good deal. They got a heck of a deal on equity in the corp. So that was helpful and built us a small treasury that will carry us into 2024. If the coin price doesn't go up, then at some point in 2024, we're going to be right back in on the horns of that dilemma again. So that's a problem, and I'm forecasting that to come due probably in the March timeframe, something along those lines. So I started going out and talking to our former investors, and it's been a really challenging year between management and our stakeholder community because a lot of this sort of situation we're in with crypto isn't just crypto centric. It just so happened that crypto cycles aligned really well with the whole generalized market situation, right? This whole inflation thing that rose and grew to such a crazy place to where the Fed and other central banks had to really, put their thumb on the scale. And that caused everything to just go ahead and sort of start to collapse and really, people were pulling in their investment horns. And at the same time, a lot of the people that invested in our project, and I think probably if you really were to dig into it, a lot of the money that was sloshing around in the system was money that was given out on that big PPP thing that the U.S. government did. Like Ethereum, for instance. Lubin, I guess, relocated the core back in 2020 from Switzerland to America because he could take advantage of a gigantic PPP giveaway. And there really wasn't any way for us to do that. I'm the only USA employee. Back then, we did have another contractor who was with us, but everybody else is, in places far flung. And so you couldn't actually submit a PPP app on that. I guess I could have forced all those people to sort of become USA employees, but I don't know how that really would have worked. And the point I'm trying to make is a lot of that money that was really free flowing went into projects like ours. It went into things, that were a little bit more speculative. And all that's gone. It's mostly been used up by the people that received it, right? They're not just sitting on all this free money looking for yield, trying to find something to put it into. So going back to our investors was a difficult proposition, and they, there was some push and pull there, and really we didn't get a lot of uptake, that we had in previous visits to that channel. I had continued to try and reach out to Venture, but Venture was pulling in its horns. You can look at any TechCrunch, any of the sites, you'll find the same. That over the next year, the crypto cycle will begin to play out the way it typically does. And I think we'll start to see some money come back into this. But what I've kind of come to a conclusion on is that, we've never been an attractive venture capital target, and there's just a lot of reasons for it. I've covered most of them, but I'll just gloss them really quickly here. So first of all, we're not doing anything cutting edge. I mean, I know that people like to think that this whole distributed networking and everything is really cool and we're bleeding edge and so forth, but we're really not. This whole distributed networking is just the tail end and the finality of a move that's been going on for 2 decades. The pendulum swung from networking, going out to the internet, in the late 90s and the 2000s to being this, blown apart distributed thing. And then it really kind of became, centralized all around a couple of entities. AWS ended up sort of developing this whole cloud architecture for unstructured storage. And then, GCP and Azure came along and really grabbed up a lot of share. This little cartel owns 60, 70% of the object storage that's out there. Then there's, another 20, 40, 50, companies that are out there trying to pick up the extra share. And so, a lot of that has been driving to the edge for some time. Even AWS is doing certain things like sovereign cloud now, and, these different projects. GCP is, trying to incubate some of these distributed projects. So the whole notion of this being sort of cutting edge it's just not. It just isn't. The stuff that's cutting edge in crypto does end up attracting a lot of VC money, but most of that is attracting capital into tokenization, where the VCs are just playing a jaded game of dumping the tokens on their community as soon as they get the opportunity. And that's just really never been our thing. So, of course, they're not interested in this because they don't see how they can just grab this, early sort of liquidity and then dump on a big community and get out with a whole bunch of profitability. So that's sort of the deal. The other deal is, as we've talked about, we don't have any real luminaries on the team. We didn't come from, Stripe or Twitter or, some other big corporations. We weren't, in that kind of regard coming into this. So, that is what it is. And then at the end of the day, we were, pre-revenue, but, the model that is being baked up in this whole notion for distributed storage, or even in the regular unstructured object storage, it isn't, super attractive. I mean, it's not like crazy. In fact, what you see is, you have AWS who set the bar at $23 and kind of have held it for maybe 12 years or something like that. And GCP and Azure came along and sort of matched and stayed there. All of those entities, through their partnering program and through their direct sales, will slash their prices. Like if you're an enterprise and you show up at AWS, you say, yeah, this is all good, but we're going to need a much better price on that S3. They'll come in at 50% of what their headline price is. They just don't advertise that, right? But you have to be an entity that, can guarantee a significant, quantity. Well, so then Wasabi shows up, and their whole deal is 80% off, and, Backblaze and a few of these others are out there really focused on the costing. So from a straight hardcore venture capitalist looking at this niche and saying, so, if you're pre-revenue, what does the revenue profile look like? And they're not convinced, because they're looking at it, they're saying, seems like it's a race to the bottom, right? So we do actually have the answer to that, by the way. And, I'm happy to share that with anybody who really wants to talk a little bit about it. But the whole notion has been, and this might be news to some of you people, but it shouldn't be, because we've been very clear about this. We're going to lose money selling storage. This is the cost of building out this whole infrastructure. If you go to AWS and you kind of say, show me a network, or not a network, but a technology, diagram, you're going to find that S3 layer on the very bottom. And then there's, hundreds of applications that they've built out on top of it. And so to actually build out a hyperscale, global-based network that can really take on SME all the way up through enterprise type customers, we're going to have to grow phenomenally. We're going to have that helium growth curve. And to get to that helium growth curve, people are going to have to come in. They're going to have to be able to see a reasonably good pricing mechanism, performance, security, all durability, all the stuff that we've been marketing in the virtual private data center strategy. But, that whole price equation doesn't work. And it doesn't actually work for Wasabi, by the way. And their whole idea was, we're just going to go get overage at real data centers around the world. We'll stitch it together. Then what they've done is they've taken all that venture money and they've essentially subsidized the cost, because they aren't making a lot of money on their storage. And in fact, they raised their prices over this last year because they aren't making money on storage. Then storage comes along, right? In crypto, and it's like, well, we're going to do $4 a terabyte, and it's like now they're out there trying to convince their storage providers that they have to take a haircut. They're just apparently going to test that to see how far it goes. It started to look like it was cracking because the provider stood up and said we're going to have some randomized strikes, but I don't know if that actually ever came to fruition or what it looks like. I just know that at the end of the day, if you want this thing to succeed, you have to make it so that the people that are doing the network provisioning, you guys, can make good money once the storage starts rolling onto the network. And if you aren't making good money, you're going to have 100 alternatives and opportunities to go to. Now, in our case, it does work in terms of an increased coin valuation because, as I told you, we had to go out and buy a bunch of coins from people that wanted to own stock equity in our corporation. If the coin price goes up, that runway will extend out a little bit for us and, will help us out in terms of going forward. The Ripple decision came along at a fortuitous time. It just did. And so that gave us the ability to say, well, okay, well, look, let's move this SPFs over and let's start working on that and get that done. Again, I don't think it's going to be the kind of thing that happens every day in crypto. I don't think we're going to get $40 million for putting SPFs out there on DeFi. I think we'll have a modest raise, and depending on who we get for influencers to come along with us, it'll be something that's pretty typically generic for us, but that's fine, really, if you get down to it, because, if we get a modest raise out of the SPF listing and pre-sale, then what we can do is we can keep things, moving and operational until the storage partners start to really get their feet underneath them and really start to deliver on, their part of the equation. And we bring on more partners and we get a little bit of brand marketing out there, some search engine marketing, specifically Facebook and Google marketing. Probably not going to do Twitter now, but we'll see. The deal is that people that are looking for us right now aren't going to find us because we just haven't done any of that work. But with a little bit of capital under our belts, we should be able to do that. My goal is just to get us to Q2, Q3 of 2024, because I think by then, really the headwinds will all be gone. Everything will be a tailwind at that point. Crypto will be looking really good, I think. I think that, the chances of a really, overwrought recession are probably diminished. I think that ultimately, this whole notion of, decentralized projects is going to become less silly season this time around and probably be forced to focus on things are real. The whole notion here is we're going to get SPF over there onto a raise. We hope to raise, three, five, $800,000, something like that. We'll put it out there in a standardized pre-sale where people will be able to come in and buy the token in order to be able to provide liquidity into the DeFi exchange and ultimately earn there. It tends to be a number of fairly large entities that do it profitably, and it's because they have the software to correctly run against multiple chains and multiple coins and be able to move money in and out correctly so that they don't end up, having to stare at this thing called impermanent loss, which, shows up no matter if the coin goes up or goes down. So, my gut tells me that the LPs are not going to be made up of people in this room right now. Some of you may do it, but, I think for the most part, it's going to be bigger entities, bigger people that are over there that look for these opportunities and can monetize them correctly. But that's fine. And at the end of the day, we don't need to get a gigantic whack of TVL over there. What we just need to get is enough to provide the kind of liquidity that a project like ours needs. So I feel pretty good about that. So let me talk a little bit about that and what it looks like today, because it's changed a little bit from what we talked about in the roadmap call. So first of all, like I say, if we can get to that place to where we can get that raise off the ground, then that buys us, probably 4 to 6 months. If we get a bigger raise than we anticipate, then it could buy us the whole year. if we get a giant raise accidentally and somebody just says, holy cow, we've really loved this project for the longest time, but we could never play because they're, don't have a real exchange. They don't have, ability to really get a hold of a lot of coins. So, who knows? It's possible, fingers crossed, we could get a big raise, but if we keep our sights set around what we think we're probably going to do, then it gets us into the summer time frame and so forth. And then by then, what I expect to have happen is enough storage sales will be happening to fund the team significantly. Because if you think back to beginning of 2022, all of the node sales and growth were funding us very nicely. And had we been able to maintain that on the back of storage sales, my guess is that we would be putting away enough cash to pay for the whole team, plus probably generating excess cash flow that we could be holding in reserve. So more storage on the network will translate into more people wanting to be on the network. More people wanting to be on the network will be more license sales, more node sales. The flywheel, it begins to turn. It's a real legitimate flywheel. It's not some bogus fake thing. And then ultimately what ends up happening is we are a self-funding team. Right now, I benefit if SCP goes up in value. I never have benefited from selling SCP, right? The whole deal is that we want to see the coin price go up because we've always had some sized wallets of the coin. We've never had, gigantic wallets, but we've always had 1 million, 2, 3, 4, 5 million coins. And so we've always benefited from the coin price going up. Our incentives are aligned. If I was selling SCP into the generalized market, that's not incentive alignment. That creates a chart that is always trending down, and then some mysterious force has to sneak in and pump the coin back up to keep it at a reasonable price so that they don't have to give that many away to the storage providers. And so then you get this sawtooth chart that looks like this, and that's kind of questionable, and you scratch your head and go, what's going on there? It's pretty easy to understand when you think about it. The incentives are not correctly aligned. You can say whatever you want to say about, the decisions made by the development team and where we're headed and, what our philosophy looks like and so forth. But on that utility coin, it's a permissionless ASIC, mine deal. And we can't change anything about that emission unless we go out and get community, validation. And how do I know we got community validation to change the emission of the SPFs, for instance, or to bring back the developer fee that had been sent to the burn address? Well, because there wasn't an SC prime created, right? Nobody came along and took the fork and carried it through. Nobody kept the S11s live and kept another coin going. And, anybody who wants to say that, that these forks are not legitimate, well, where's the proof of that? Where's the other project? Where's the legitimate project that took over the legacy and is running it for the benefit of the community? Doesn't exist, right? That tells you everything you need to know. Fairly clearly a legitimate fork. So the deal there is that we have 200 million of these tokens on SPF that are sitting in a locked treasury that are going to be ours in perpetuity. So quickly, I'll just tell you what we plan to use those for, because we have those 200 million, and then we have another 100 million that are available to give out to you guys, to sell to the public, to use in various kinds of ways, shapes, and forms. But those 200 million ultimately are for when we move to the place where we push conductor out to all the relayers or out to the relayers that want them, right? So, right now we're going to release storage credits. They're really been done. They just need some front end help on it. I'm hopeful that'll happen this week. But the deal is that the storage credit thing is done. So that's kind of like the first way that people are going to be able to buy their own SCP to use in their contracts. But it isn't a legitimate decentralized way of doing it. The legitimate decentralized way of doing it is we push conductor out to an individualized relayer, and then they're essentially their own people. We can't, tell them, to do anything. We can't stop their contract, and, there will have to be some real good sort of infrastructure put in place as far as the legalities and stuff there in advance of us doing that. But that has always been the potential future, is that we'll push the contractor out, and there will be a true decentralized web here. I still think personally that the lion's share of companies will not want that. That the lion's shares of the companies will want somebody to deal with. They will want to be very clearly allied with somebody that has an SLA, that has, a good TOS, that has a lot of the stuff already sort of nailed down, and then a bunch of applications running on top of the S3 layer, right? So I think that, a decentralized part of this will be a big part in the future, but it won't be a majority by any stretch. I'm almost certain of this, but I'm willing to be proven wrong. And if I am proven wrong, that 200 million coins will essentially be the way we collect that revenue from those people that go off and do total decentralization. That's how we'll continue to gain our share of the software we developed and put together for them so that they can continue to build and use virtual private data centers going forward. So those 200 million are never going to get sent out. They're always going to be held by the corp forever and ever and ever. Of course, the utility coin is critical to this thing and will be critical going forward. And it's most important to understand who's going to buy it, because people are saying, well, yeah, but you're going to be so focused on SPF. You'll be marketing SPF. It'll be, you'll try and pump it and do all that. I'm like, well, I don't think so. But what really is going to end up happening is that the SPFs will draw in attraction from people that can't really participate right now, because they look at the liquidity on SPF or on SX and on Trade Ogre, and they say, can't really do trading there. How are we going to trade in size when the daily volume is something like, $4,000? That's just silly. That hasn't changed in over 2 years, by the way. We got one little, big spike in late 21. We got a somewhat smaller spike in early 21, but other than that, the liquidity just hasn't been there. And the whole notion is that the SPFs will generate interest from people who trade in size, right? And they'll come over and they'll probably, do some work with SPF, but at least some of them will say, this is really interesting. 55 million is close to the, end of the inflation schedule on this utility coin. There just aren't a bunch of them out there. And when you go look at it on the exchange, there's only like 1% of the total supply actually listed in the exchange. Where are all these coins? Who's holding all these coins? And, they'll start to say, this makes sense to start to sack away some of these coins, because this coin can only do one thing. And the people that think it's going to go down to 2 cents right now, I mean, it could. I'm not saying it can. I'm not saying that there aren't providers right now that might not show up and say, end of crypto winter, I want to get all my money into Solana or, AVAX or some other thing, and sell off 30,000 that they got off of a rebate, into the liquidity that doesn't exist. I'm not saying that can't happen. It can. And if it does happen, congratulations to the people that end up buying those tokens, because, ultimately what ends up happening is that over the next 6 to 12 months, as storage enters the network, somebody's got to buy that storage, right? Somebody's got to pay for that storage. Well, that's us, right? We've never not been a buyer of this coin. We will never not be a buyer of this coin. When the coin runs out from our current wallets, we better have incoming revenue from storage. Things better be going upwards, or else we're going to be in a bit of a challenge. But we will be the buyer of last resort, first resort, and all resorts. If there are other crypto traders in there with us buying the coin, well, that's whatever it is. But at the end of the day, we have to buy this coin, and we have to buy it to put into storage contracts to pay you guys. So it costs 50 or 45 or 55, somewhere in that neighborhood SCP right now for every terabyte that goes up on the network. It's actually more than that because our incentives are still pretty crazy high. But if you just take that baseline of, 10 cents, 55, tokens for the, data plus parity, that's not a scenario that is tenable. We're going to gain money off this SPF raise. We're going to pay our coders. We're going to pay for brand marketing. We're going to get storage on the network. As the storage comes onto the network, we're going to gain revenues that we'll be paying off to the network. We're going to get more node sales. We're going to get more license sales, and that will generate the revenue we need to ultimately keep buying more coins and to, ride that storm upwards. And as I say, my belief system is that by the time we get into next spring, SCP will be significantly higher than it is today. It shouldn't have went down to 10 cents. It should have went down to 20 as a floor, but I can't control markets and I'm not even going to try. So it is what it is. So I just want to talk about this Black Friday sale and how it ties into that whole thing. So the notion here is that when a project puts together this kind of a situation, there's typically what's called a pre-sale. And in our case, what we've decided is to change this whole notion. We're not doing a wrap token anymore. We're going to send the coins over to whatever the other chain is, and then they're going to stay there. And they will get burned on this side and they will never come back. And when they first go over there, they will not collect the SCP claim, which is okay because they're not earning all that much right now. We will have a secondary update that will happen, probably 3 months later that will bring the claims over into the coins on the other side of the transporter. So the deal is that we will be pushing through a significant number of tokens into a pre-sale. So somebody ought to be saying right now, but wait, isn't that what, got, the people, illegal for pushing, if everybody knows that the corp is selling coins in the pre-sale, then aren't you just buying from the pre-sale? Well, no. And the reason why is because we're going to allow two other tranches of tokens into the pre-sale. One is we're going to allow a tranche from our current stakeholders who all pass muster for accredited investors. What ends up happening then is there's another tranche that can go into the pre-sale, and that's anybody who's bought off this recent license sale that we put up. The deal there is that those will be the only tranches that can go over, or that'll be the tranche that goes over. Then what will end up happening is we will set up an emission schedule, and that emission schedule will be something like, 5 to 8 million tokens a month that can be transported across. They'll probably be dropped down onto a block by block level. So every block, so many tokens can accrue to go across the transporter. So what'll happen is you'll be able to go into the wallet. You'll be able to set up the transfer. You'll click send, and if there's enough tokens in the emission to go, they'll go. And if there's not, then what'll end up happening is you will end up having to get a message back from the API that says, sorry, there's not enough available yet. You'll have to wait, try again, in the future. That they're going to have a very clear limited supply hitting the market at a very clear schedule over the course of the next 24 months. And that ultimately, they will have some certainty as far as what, can slash the market and what can't. If you take that 100 million that are still to be distributed one way, shape, or form or the other, and then you take our projected numbers of what the network is going to look like in 3 years, I believe we're going to have 300,000 nodes on the network in 3 years. And 300,000 nodes, and if you divide that up on 100 million of these tokens, we're talking about each, provider having 10, 20, 100, 200 of these tokens on there, not thousands. The people that have thousands are going to be the ones that have crazy wallets. That will drive the flywheel, and storage will be coming on board at that time. So then we'll have money coming in there. Crypto markets improving will cause us to be able to get more sales of nodes and licenses. We'll have money coming in there, and we just won't need to give out any more SPFs, and we won't. That's the last thing I want to talk about is this whole DePIN thing. So if you follow crypto Twitter now, it's really got boiled down, right? There's hardly anybody out there anymore, but it's starting to pick back up again and retail's starting to come back. And the one thing that keeps getting discussed everywhere is this thing called DePIN, Decentralized Physical Infrastructure Networks. And I'm of a mind that the reason why it's getting as much, action as it is primarily because of Helium, right? They had the biggest, most baddest, network growth over a short period of time as anything has ever been seen on Earth. But they aren't the only ones. LivePeer is doing the same thing with video transcoding. You've got, a few of these other projects out there that have grown some pretty good sized networks. They were ready to go, back in the right time frame. Our problem was we were just kind of late to the dance because of how we got started. We got started in the bear of 2018. So that kind of put us into a tough place in terms of, being ready to go when this, last cycle kind of hit. So anyway, the situation is we're prime ready for it now. Well, because they're all talking about it, that means that these are the projects that are likely to get the big headline run this time around. Now, you might look at that and say, well, that sucks because we're going to lose because we're not in that group. We're not in that crowd. They don't believe in us. We aren't part of that. But that's not right. If you go out and look at any of the big graphics that these analysts put together, they still acknowledge we're here and they still acknowledge we're a real project. Our thing is always about getting more storage on the network, and it will always be about getting more storage on the network. But that's where the magic happens, because we saw it at the end of 2021. Everybody piled into the project and ran it, like crazy. We went to 4,000 providers. And if you think that that's not going to happen again, I can't help you. There is a whitelisting process that we'll have to go through. So, there are people that will not be able to buy the token in the pre-sale or probably even going forward over on the other exchanges, but that's pretty typical for that kind of thing out there. You'll have to dig into that and understand how that all works when we get to the sale. Like I said, the coder is in the process of finishing up the transporter side, or he's working on the coding for the transporter side right now. The second coder will be diving in on the smart contract next week. And over the next 2 or 3 weeks, we will nail down what that contract looks like, what chain it's going to be on, what the tokens are going to look like, and all of that sort of stuff. And then ultimately, I think that we will be ready to launch this thing by the end of the year. And the great news about that is we aren't going to be in selling mode like Helium was without a product underneath our, wings, right? The only thing that will allow us to get to 300,000 nodes this time around, because people are going to call bullshit on that whole thing this time, is that we have to show quantifiable storage growth on the network, and then that will cause people to pile in. We essentially drive storage sales, that gets more nodes on board, we drive more storage sales, and it just becomes this kind of thing that feeds on itself until we get to the tail end where the network is pretty well in place. And then at that point, I expect that we'll have several other applications running on the layer over top. Compute and some of the other things, CDN, DNS type stuff. There'll be all kinds of things that we can do over top of our storage layer. And those are places that we're going to make a lot of money, right? Where, maybe we don't make money on the storage layer, but we do make money on the applications that are running over top. All right, that's pretty much the call. I did want to say the key things about this call today were it's not a wrap token. It is going to send the tokens over to the other side, and they will stay there and live there forever. They won't go over initially with the SCP claims. They will pick up the claims in a secondary upgrade that will come probably mid-year or late spring, early summer of next year. And then you'll start to be able to get your claims again over on those tokens. But what I do know for marketing is it looks simple. It's a pretty straightforward understanding. Our deal is we need to backstop the partners. So when a partner goes out and he finds a customer, first thing he's going to say is, I've got this thing called XNS. I think you really ought to check into it. And then he provides some of the resourcing that we have, shows the graphics, the materials, the videos, all of the stuff, explains it, shows them the software, demos it, does all that sort of stuff. And that's enough to get a lot of people quite a ways up the road. But then if they go out and they try and do some sort of like search, on us, we're not there, right? Unless you're very specifically looking for us, you're not going to find us. So we have to get out there and do search engine marketing. That's the key marketing that we're going to do. And that search engine marketing will be driven around a couple of different ebooks. One will be a case study, probably on video surveillance. We're talking about getting this case study done over the next couple of weeks. One will be on virtual private data centers and will be just a straight ebook without a video component behind it. And those two search engine marketing landing pages will be the things people find when they go out and look for us in Facebook search, or they look for us in Google search or whatever. And then those things will bring them in, and they will then be funneled off into all the other resourcing that we've built, the demos, the product videos, all the things that we currently have on the website. So that's where all the marketing is going to go. It's a brand recognition strategy based around search engine marketing and ebook landing pages and those kinds of case study type works. We've always said that that's going to be the primary marketing. Later down the road, we will start to do some of the work that storage does when the budget allows us to do it, which is advertorial, where you go out and you get one of these storage related sites to do an interview with you or to do an article on you or to do that kind of informational on a project or product. And then ultimately, what people don't realize is that the company actually paid for that, right? They paid for that editorial slant, and then ultimately you get out there like that.